Much like Sydney Sweeney in a red dress at the Oscars, inflation remains hot, hot, hot. We're going to be discussing that, its implications on the markets moving forward, and much more today on Money Never Sleeps. Thank you for joining us today, everybody. Before we get going, as usual, do us a solid. Hit that like button. Whether or not you like the show is kind of irrelevant. Just do us that solid. Subscribe to our channel. Nothing that Kevin or I say is financial advice. So please do your own research before you make any sort of transactions in the markets. Kev, we got another hot inflation report. Not even a little bit surprising. We discussed on yesterday's show that we weren't expecting the market to do anything too crazy today. And we've actually seen, a tick up across the board, even with this hot inflation. The market is not rational. We've said this for a while. We'll talk about that in a second. The market is not rational, because when we look at this and we see a inflation report that came in on almost every number higher than expectation. I think the only one that didn't was the headline month-over-month number, but the headline year-over-year, the core month-over-month, the core year-over-year, all came in higher than expectation. We're seeing shelter continuing to run at almost 6% inflation year over year. That's not sustainable when it makes up a large amount of what people are spending their money on. Transportation services up almost 10% year over year. So it's not great. In the words of the wise Kevin Shannon, it's not great out there. But the markets, they don't care. Who gives a shit? Let's send NVIDIA up $50 a share today. Let's have Meta recover a lot of yesterday's losses, go up almost 3% today. Screw it. Nothing matters. It's all a fugazi. Let's just print more money and throw that at the problem.
Yeah, man. It's really easy to get annoyed by, I guess, the price is going up here. Like, it's very fatiguing. You know what I mean? Like, bad news just doesn't fucking matter. The data doesn't matter. That was almost the title of today's episode. And it, to a point, it doesn't, right? They're going to buy it regardless. But part of me still believes that there is a problem in the debt market to think that who bought today is most likely going to be gamblers and, institutions. The biggest discrepancy I've seen across the board in people who are buying today is when you look at the Russell 2000 compared to the S&P and the NASDAQ. Those are up. NVIDIA's up like crazy again today. The tech stocks are up again. And we know how much weight that those have in the indexes. So it makes a lot of sense. Plus, we know that people who are buying the most of these tech stocks are the tech companies themselves. And that blackout window begins on the 14th, right before OPEX, which tells me that they're probably going to take the time afterwards to offload anything. They're just kind of running it up here because they won't have another chance for about a month or so. Because it makes no sense why the market would rally on this. Everyone's still kind of pricing in those Fed rate cuts as well. I will say this, and especially when it comes to energy as well, the energy market globally is at a point where demand is so low that they have to constrict supply to increase demand. And that's not a sustainable metric by any means, right? That's because I think it was year over year, energy was down in terms of gasoline. However, it was up once again this month compared to what it was in the prior months too. So we're in it's so hard to kind of navigate this here, because nothing necessarily makes sense. The markets are going to do whatever the markets are going to do, but I can't sugarcoat any of this. This looks good, sustainably for the next 12 to 18 months.
Yeah, that's let's talk about transportation for a second. Let's look at Boeing. Will you pull up Boeing's chart, because they are continuing to with all of the latest issues with their planes and them getting grounded, it is just a bloodbath if you've continued to hold Boeing stock over the last few weeks.
Yeah, today, what, 4.64%? It's below the 200.
What?
Let's
go back to December, before a lot of the crap started happening there. It's down 30% in that short period. What's that? Death Cross?
It has. Oh man, you beat me to it. Gotta love it.
I didn't know it, because I wasn't looking at the chart for a second there. I'm like, it's gone down so much in such a short period of time. It has to be close.
Yeah, I mean, let's see how it looks on the weekly too. It's probably getting close to there. What the hell? Oh yeah, double death cross. I'm not gonna play it again, but we've gotten
No.
2 death crosses. I'm sure on the 3-day chart it's oh no, 3-day we got one to play in a few days. But yeah, I mean this stock has been absolutely bleeding, and it kind of shows you that this run up from October all the way till the beginning of the year. It's kind of let's just fucking let everything you go casino mode and push to the upside. And when reality kind of set in for some of these companies, we're starting to see some of that pain, right? I know Boeing's having a lot of problems right now, a lot across the board. I'm not going to say much more other than that, but there's a lot of other companies are also seeing similar things, just like this, where the news hit where things aren't so great for them. Things are just happening that they can't control, and the stock starts plummeting down, right? That doesn't necessarily show signs of health in a market. It also shows that it was extremely frothy up here. I mean, if you were able to ride this up, like you said, that's what 52% move there, and then if you're able to ride this down from there, I mean, that's almost 31% as of today. So there's a lot of opportunities like that, but at the same time, it shows you that they're outside of the big tech companies. There are definitely some companies that look like they're going to be heading a lot lower.
Yeah, and when you dive deeper, let's bring this full circle and take it back to the discussion on inflation. When you look at these companies that are the greatest impacted by inflation, we're going to continue to see some of these issues, right? Like transportation with flights has gone crazy. Energy is on the way back up. Let's see, clothing, I believe, was another large driver of that big core number. And core still being at 3.8% year over year, almost double the Fed's mandate, is problematic. I want to bring up as well, because the markets are guided by where they think rates are going. We see that next week it's guaranteed that there's going to be no movement in the rate. Now we see that in May, it has moved up to about an 89% chance that they also are holding at this number. And the odds of a cut in June, while still the odds are there that it will be a cut, they've started to come back down. And if we see more of these hot inflation numbers, I mean, the Fed's in a damned if you do, damned if you don't spot, right? Like if they don't raise the rates, are they really going to see much traction in inflation? If they do raise the rates, that's even more strain on the banks. We've already started to see things start to crumble in that area with some of these smaller regional banks. You add to that we have all this commercial real estate, valuations going down, renewals coming due for leases that aren't going to be re-upped. Like it's there, as bullish as a lot of people want to be on crypto right now. And trust me, I want to be bullish too. But wanting to be bullish and there actually being a reason to be are two very different things at this point.
Yeah, I completely agree. And again, we looked at the divergences yesterday on crypto. Doesn't make a lot of sense, right? It's very reminiscent of some Binance shenanigans there. But I do want to get back to the point where you made about, there are a lot of things that are kind of headwinds right now. I think the treasury market is in collateral in itself is something that people need to be keeping an eye on too, right? We saw that. I'll pull this up right now. We just get into New York Community Bank because that deal also is abysmal. What they're doing a reverse stock split for the cash infusion. So pretty much anyone who's a shareholder is going to be losing out on that one. I also think it gave a lot of people who had options contracts on it. I don't know why that's pulling up. Get rid of that giant spider. Options contracts on this, this bank. A lot of them just pulled out, man. You're pretty much betting on this thing going up or down, obviously, but this isn't going to end well, in my opinion. What was the one bank that Mnuchin, IndyMac or something like that, back in I think 2007, 2008? That was another one that Mnuchin kind of helped bail out. Failed. It's no different with this one too. A $1 billion capital injection doesn't necessarily mean anything. And we know that a lot of these banks that are also going to have some of these problems are going to require collateral in order to use some of these windows to borrow from the Federal Reserve or some of the secondary market. If they don't have that collateral, they are absolutely fucked. And we saw that there's been a really bad, even today, another bad tail on the Treasury auction. We saw that the Fed had 0 for the 3-year and 0 for the 10-year. It pretty much meant that no one was bidding on that shit. So we also have one of the biggest treasury auctions coming up next month. Everything's super frothy right now. You know, the Federal Reserve is at some point going to break something. We know that there are already kind of rumblings in the labor market. We're getting a lot of those revisions. And if they keep rates this elevated, these banks don't have the collateral. They're not creating debt because the rates are still extremely high and people are leveraging debt if they can, if they're able to have access to it. Well, something's going to break. Um, Rates can't stay higher forever without something breaking. That's the unfortunate truth where we stand right now. And the question is, when does it go? And what is probably going to be the first one to make the move? It'd probably be the equity market into the treasury market, in my opinion. But I have no idea. I'm not going to fight this market one bit. But there's a lot of problems here that are just going to absolutely unravel if we continue to see rates this high. And again, I think that the rates right now are absolutely BS. I think that there's a lot of price, gouging right now. I think that, especially in the oil and energy sector. But at some point, everyone's saying that we're going to have hyperinflation. We will, but it's not going to be short term. I think that at some point, supply demand, there's going to be a problem of too much supply, not enough demand, and that's going to bring inflation down significantly for at least the short term, maybe 2 to 5 years. But I do think we are entering this level of continuing to spend is just going to continue to bring problems for inflation. I mean, the federal government's probably going to be spending a lot more. That was the funny thing. Biden announced, I think, a new spending bill or something like that. And it's like, well, aren't we trying to fight inflation here? Trying to bring it down? If we continue to spend and borrow money that we don't have, that's just going to fuel, the fire even worse.
I want you to go ahead and pull up the chart for Dick's Sporting Goods.
What's this is ticker, one Dick's?
DKS.
Oh, okay. I was trying to be funny
for those Dicks. That would have been really good if they would have done that. I don't think they're not a meme stock, so they wouldn't
just do Dick.
When we talk about clothing and some of the other areas where inflation is coming in hot, and we see a chart like this, I mean, and look at that gap. I know that you're a big gap guy, but look at that freaking gap. I mean,
this one right here or up here?
That one like back in, when is that? Like August of last year. Yeah. I mean, from its lows back in October, this bad boy is up like 80%, 81, about 82%. I mean, I'm not saying that you should short this. I'm not telling anyone what they should do with their money. But if I ever saw a chart that didn't make a damn bit of sense based on the current economic climate, and I don't know a ton about technicals, but this one, I don't know, man. That to me, oh Jesus!
Abercrombie and Fitch, man. What's going on here? I mean, I think you make a great point. Like, why the fuck are these continuing to go up? It's not, reality's over here, and what people are buying over here, you can't see my hands because they're off screen, but they're not on an evil playing field right now. Everything is absolutely inflated to outside of reality. We're living in a fantasy world right now when it comes to some of these valuations on these stocks.
Black Mirror episode
that just won't fucking end. What is this? Bandersnatch, the 2-hour movie or whatever it was. That's what it feels like. Just won't end. V-neck shirts and golf clubs are making this economy go. Well, just choose rich. We got to get into that, man.
We'll get into that. Let's so back to our conversation here. I'm not saying you should be shorting this stuff, but like, at what point, and this is more of a rhetorical question maybe, we've stated that this market doesn't make a damn bit of sense, that it's not in a rational market where we're seeing the moves in inflation and we know that rates are going to be, things are getting tighter and tighter, right? Like people's savings are going down. Credit card balances, debt is increasing rapidly. Buying power is down. Like basic necessities are through the roof once again. It would make sense to short some of the luxury stuff, but that would be assuming a rational market, and we cannot make that assumption right now.
No. And here's the thing. You don't know how close you are to being at the top, right? That's the thing. You could be a week away. You could be
I say
2 months away.
Luxury, but like, let's be real. Abercrombie & Fitch isn't luxury. It's like what, upper, like middle and upper middle class teenagers are wearing, right? Like I'm talking about like LVMH here. They're going to be fine because, the rich just keep getting richer here. But some of this like middle, the stuff that the middle class, the shrinking middle class, the stuff that they buy has to be ripe for a short. Like it just has to be at some point. But I don't know when that point is. And I'm not smart enough to try to time this market. So I'm just going to stay away from it. But I'm just saying, if you are one of those more risk tolerant people, might be an area to look at.
And I will say this, it's dangerous shorting something like straight shorts on these stocks because earnings and how people react is fucking stupid, right? It's not like crypto where, you can kind of nothing in crypto other than some news about XRP beating the SEC or something like that's going to, rally the market too much, or USDT you can kind of, know when not to short if that's being minted. But, in the stock market right now, it's just absolutely bonkers. I mean, as much as I would love to short everything, I think the play I'm taking is just cash on hand, man, because when this does go, it's going to be bad, right? Is that Q1 earnings because Q4 earnings weren't necessarily that great for a lot of these companies? We're going to find out in April. It's going to be really interesting, but at some point, I think the labor market's going to obviously lead us into this equity pullback. And right now, it's very hard to be bearish up here, but it's also extremely fucking hard to be bullish up here because it doesn't make sense to buy near, all-time highs, right? That's a dangerous, dangerous game you're playing if you're expecting this to be a long-term hold, right? You don't want to be what you did in, not you, but what people did back in 1989 with the Nikkei, right? At 35 years out to get back to break even. It's just so dangerous up here, and it's.
I wasn't buying stocks when I was 3 years. I wasn't playing the Nikkei when I was 3 years old.
Oh man, that's what you got to choose rich.
My first involvement in the financial markets was when I was like 8. Because I used to go spend a lot of time with my grandparents in upstate New York, and every day after market close, my grandfather would get on the computer, fire up the dial-up internet. He would have his ledger with all his stocks, and he would make me write. He would read off the numbers for the day, and I would like put into his physical ledger where the stocks closed, and he would have me like do math with it and stuff. So I've been doing this shit for a long time, man. Like I am old. Like trading on dial-up internet when you're 8 years old, you love to see it.
You were set up for success at an early age. Gotta love it. Let's talk about the VIX real quick, just because that's something that's been getting crushed like fucking crazy, and we have to bring it up because it just makes no sense right here. And, this is very similar to February of 2008. I would say December 2000. I mean, not 2008. 2018. Also, let's just delete a lot of this shit too. Is that the DXY? I'm stupid. VIX. That's what we're looking for. There we go. We're looking for 2018, which would have been the volmageddon, right? That's this stupid rally that we shot all the way up here to, what is that, around 50 or so on the VIX. Granted, we were trading roughly around 9, 10 for a long period of time. And again, it was kind of the short volatility trade that was going on for a long time. And then I kind of realized this pattern. It doesn't always play out, but you can kind of make these triangles where, we get the high of that and you see where it acts as a level of resistance for a period of time. We had that from 2016 all the way till 2018. Then we got the pop there. We had it from February 2018 all the way till about September of 2018. Then we got, another pop. And then we had it from here 2018 all the way till January 2020, and then we got a massive pop there, right? So I'm kind of charting this one here and seeing where this pop is. We're seeing October 2022. I maybe could even push it out a little bit further, but it's been coiling up for some time, and you think we're getting closer and closer to the end, and it's been trading sideways for a long period of time, and we're even starting to see a lot of retail investors that are getting in on this short volatility trade, because why wouldn't they? Thing is, if volatility stays, decreased, then that also increases the S&P, and it's just kind of a really bad spread that we're seeing. Now, it got crushed today. Volatility's down, or, the VIX is down 8.34%. It's kind of no surprise, but then you kind of look at, can you trade the VIX? Technically, sometimes you can. Thing is, it got rejected from the 50 moving average, or the 200 moving average on the daily, and it went all the way down to the 50 on the daily, which is where we currently are today. Now we're getting really close to the end of this, this triangle, this, I would say this point where we'd have to make a break up or down. Looks like it's in June or so. It doesn't have to be in June. I think anything could actually lead this to break sooner than later, because of how much we've coiled up for a period of time. And again, as the volatility continues to die down, it means that the rip, when it does come, is extremely violent, as we've seen in that chart before. If we look at this on the monthly, let's go to the monthly. You can see that volatility is on the rise. Looks like it's on the rise, but it's still extremely low. And looks like we just got the death cross on the monthly. With the last time we got a death cross on the monthly was roughly right around here, March 2013. Got a little pump there, so nothing too crazy, but I mean, that's 30 compared to where we are now. It's a pretty good move. But what I'm getting at is, I think volatility picks up a lot once people aren't necessarily buying in, and we have been seeing a lot of people not buying tech nearly as much. We've seen a lot of CEOs and a lot of these insiders that are just absolutely offloading a lot of their shares. It's going to be interesting knowing that, again, knowing that people might not be there to catch the bounce once this window does close. And we also know that the banks are in a really tough place. I brought up New York Community Bank, but also there's $80 billion worth of loans that are coming due with the Bank Term Funding Program by the end of March. So, and after that, there's another 100 billion or so that's going to come due. We're getting to a point where it's going to get really nasty, right? When does that happen? I don't know. I think that they're going to get hurt on this trade. It's one that I still think that can blow up hedge funds and a lot of trading desks because people are just getting way too confident. And again, they're getting too confident in crypto. They're getting too confident in equities, but it can only be suppressed for so long. And then when that does rip, it's probably going to be, north of at least 18. It's going to probably break this. I'd say that if we do get a VIX pop in the next 2 months or so, I think it's likely that we're going to be somewhere in the 25 to 30 range. I'm not saying, maybe, right around here where the last previous one was pretty high. There's a good chance we get up there. But right now they're shorting the shit out of this. It's just, it sucks to see that.
You remember it was late last year or early this year, the person or the trader who had that crazy VIX bet that like the VIX is going to like 180. Do you know when the expiration was? Do you remember when the expiration was on that? Was that like later this year, or is that like around this time?
It already expired, I believe.
Okay.
I think it was like, maybe it was like March 15th. I don't think it's no. It was January. It was January because it was only like a 3-month contract or something like that. It's 30,000 lost. Full figure BTP due forever. Yeah, it says no big deal, but it kind of is a big deal when you compare that with a lot of.
I'm pretty sure Chris was being sarcastic with the no big deal part of.
I know. I was almost gonna say no big deal, like I meant it, but I was being monotone. But yeah, I know Chris knows that shit inside and out, just like we've been covering it too. But yeah, the VIX is going to be, they're crushing it like crazy. And obviously you're going to see the price go up. So whenever the VIX gets crushed, obviously the stock market's flying. But at some point, it ain't going to be as easy as to make money that way. That's just one thing I had to bring up. Should we jump into crypto and wrap it up?
Yep. Let's do a quick run through crypto and then we'll call it a day.
Cool. I did bring up the mining stocks.
Okay.
Mara and Riot. We'll get over those real quick. So pretty much it depends on the economy. That's all I'm going to say. 2020 was a very different year for Riot and Mara compared to other pre-halving years. It looks like they front ran a lot of the halving for the most parts leading into it, but then it kind of pulled back right before the halving itself occurred. You can go back to here. This is the first one that they have on their first halving, 2012, rallied leading up into it. And then once the halving was here, it kind of dipped, rallied again, and then dipped once again. So obviously people are front running this. They're pricing in things before they happen. Same thing kind of happened back here in 2016. You had a really good move to the upside. And again, this doesn't look like a lot, but this is still like this move down here to up here is 300 and something percent. Just from here to up here was over 150% or so. So it's a pretty big move when we're looking at that. We've also had massive pumps in periods like this is probably the blow off top back in 2017. And then 2020, which is just an absolute wash of a year. I don't think anyone expected Bitcoin to do anything once the crash happened. And I think people were just kind of like scared what to do. And then obviously stimulus came in and it didn't front run, but it definitely ran up with Bitcoin into February of 2021. So which this would have been $60,000 Bitcoin or so. And then it decreased. Obviously lower lows and lower highs kind of trace the price of Bitcoin as well. Just every time FTX, little rally here, but this has kind of been diverging from Bitcoin's price as of recent. We can see that if anything, we're kind of in a sideways consolidation period from June of 2023. So for months, we're kind of just trading this sideways pattern. Now, the interesting thing is it could be a pennant. Again, not necessarily the most bearish of things. A pennant could break up to the upside. One thing that it could be, or this could be something even stupider, which is kind of mirroring with that ABC pattern that we talked about, where it's just a consolidation period for B and then C, and we could see it come back down post halving. I'm not necessarily sure about that. And again, I'm not going to time it. If let's put it this way, Bitcoin mining stocks are cheap. Maybe I'll pick them up, but for the most part, yeah, it seems stupid to be buying anything for me personally around these levels, even if it is looking like it hasn't even hit where it is the all-time highs. I just don't believe that we're going to go up that level. But again, very similar, front running it. they're front running the Bitcoin mining stocks, and that's what they did back in November to January or so. And now we're starting to see that pullback as we lead into the halving. So that's kind of the back and forth that we're seeing with the mining stocks. Also, I think Joe Biden announced that there's going to be some type of crypto tax on miners, like 30% of energy fees or something like that. And he's also eliminating the crypto wash sale rules, so you're going to get taxed. You're not going to be able to claim gains on anything you do a wash sale with, I believe. So I think that also is just scaring a lot of miners itself. Their profitability, and again, it's expensive to operate a mining service for Bitcoin. Don't let anyone tell you it isn't. It has been forever, and this is just another dagger for them in their pocketbook, especially if Bitcoin dumps like crazy. Not going to be a fun time for miners, Bitcoin miners, that is. And we're going to look at BTC USD right now. What can I say, man? It's back and forth nonstop. It seems like, right? We had a really good pullback earlier today. Looks like they're buying it back. It's only down about 600. It was down $2,000 or so from the open. See, open down here.
Down to like 68.6.
Yeah, I mean, it is even worse. So like almost 3,400 or something like that. It's a big move. So obviously this is a really interesting range. Like I've said, that's 70,000. We're above it clearly. So at some point it's going to get to the point where we see something like that where no one's there to bid it. The other thing is we could push up a little bit higher. 76K range is still possible. I know that's probably going to cream the pants of a lot of people who are extremely bullish on Bitcoin at the top, but I'm just trying to be as rational as possible. This thing could go up, it could go down in the short term, but long term, I think this thing is still set up for a really bad push to the downside. Now that I look at where everything is and where support is, I mean, you got some support down here at 60,000. I'm not going to hold my breath that that's going to hold. I think that you're probably better off looking at $52,000 to $50,000 for where we could see a bit of a retracement to in the coming weeks to months. I have to have my time horizon a little bit longer than I once did, but that would be a 30% move to the downside. Thing is, you'd be below the 50 moving average, which means that you might be able to test the 200 moving average at some point. Got to be open to how this thing can play out. I'm not necessarily too concerned with Bitcoin right now because obviously I'm not holding any and I don't care to buy it up here. But at the same time, this could be a year before we start to see this kind of come down to bear market lows if there is a correction. A year to 15, 16 months or so. It could be a long time. Meanwhile, Solana still kicking ass because of the shit coins. Let's see how AVAX is doing today. AVAX kicking ass once again today. Up 15%.
Good Lord, like what is going on? I mean, I have some AVAX. That was one coin I was DCAing a while ago. I mean, it makes up like 1% of my portfolio, but I have no clue what's going on here and why AVAX is just going nutty.
Imagine when everything comes to the end and it's at the bottom and you're able to buy some of these and it's just doing this stupid shit for 2-3 years on end, just nonstop bull market. That'll be fun, especially when they got that QE going again. But right now, I don't trust anything. What's this? Crypto tax is going to show up. Going to hold up $7.3 trillion U.S. budget proposal. You're not wrong there, Chris. It's insane how much you're going to see crypto just absolutely get spanked in the coming years, in my opinion. Ain't going to be a fun asset class. It's not, you kind of let the door in for TradFi, and now here we are. But yeah, that's all I got pretty much. Crypto, obviously going mania. One thing we could take a look at real quick is...
I do have to bounce here momentarily.
Yeah, absolutely. Just look at total market cap. 2.61 trillion. You're just the next move for support. You're probably looking at 2.05 trillion, so $500 billion of correction there. But pretty much it. We just haven't looked at it in a while. I'm just rambling here.
All good, man. All good. That is going to wrap it up for today's show. There's some uncertainty for tomorrow. We'll keep everyone posted on Twitter. Give us a follow. Turn on the notifications for our YouTube channel to know when we have videos scheduled. But we'll be back either tomorrow or Thursday. Thanks, everybody, for joining us. Have an awesome rest of your day. If you haven't yet, like, subscribe, comment, share us out, all those good things. We'll see you next time, everybody. Stay safe out there.
Take care. Choose rich.